So, two ETFs have been making waves lately, WPAY and ULTY. One comes from Roundhill and the other from YieldMax. Both pay weekly dividends, both attract income-focused investors, and both claim to make your money work harder. But here comes the question. Is WPAY actually better than ULTY? Let's talk about it, simply without the hype. If you've been watching the ETF market lately, you've probably noticed something. Income ETF are getting creative. We're seeing more funds that pay dividends not monthly, not quarterly, but weekly. That's a big shift because investors love consistency. People want regular income, and they don't want to wait months for it. That's where ULTY and WPAY come in. Let's start with ULTY. It is a weekly paying ETF from YieldMax. Now, unlike many other YieldMax ETF that focus on a single stock, ULTY is diversified. It's not tied to any one company. Instead, it's built around a mix of large, established U.S. companies. That makes it more balanced. When you invest in ULTY, you're getting exposure to multiple sectors: tech, healthcare, consumer goods, all working together to generate consistent income. And that's what investors love about it. Every week, it aims to deliver a payout, like a mini paycheck. You don't have to wait for the end of the month or quarter. It's regular, predictable, and simple. Now let's talk about WPAY. It is a newer ETF from Roundhill. It's also a weekly payer, but it works in a slightly different way. Instead of focusing on one stock or a single strategy, WPAY is what's called a fund of funds. That means it actually holds a bunch of other Roundhill ETF inside it. Each of those ETF has its own strategy, and many of them already pay weekly dividends too. So when you buy WPAY, you're basically buying a basket of Roundhill's weekly pay ETF, all in one ticker. That's the main appeal. It gives you diversification across multiple Roundhill funds automatically, without you having to buy them one by one. Think of it like ordering a combo meal instead of picking each item separately. So if both ULTY and WPAY pay weekly, what's the real difference? Well, ULTY directly holds companies and runs its own covered call strategy. It generates income by selling options and collecting premiums on those positions. That's what helps it pay those consistent weekly dividends. WPAY doesn't do the option trading itself. It simply holds other Roundhill weekly pay ETF that already do it. So WPAY acts more like a wrapper, combining all those strategies into one convenient package. Now let's talk about how investors see these two funds. With ULTY, many people like that it's part of YieldMax's established lineup. It's known for reliability and consistency, and since it's diversified across multiple companies, it's seen as a more balanced approach, not overly dependent on one stock's performance. On the other hand, WPAY is seen as the next evolution of weekly income investing. Instead of betting on one strategy or one company, it spreads across several Roundhill funds, each with its own unique angle. You get instant diversification and weekly payouts, all without managing multiple positions. That's what makes WPAY stand out. It's simple. You just buy one ETF and you're set. But of course, every ETF comes with trade-offs. Both ULTY and WPAY are income-focused funds, and that means they're not built for rapid capital growth. These types of ETF often experience something called NAV erosion, where the share price slowly declines over time because part of the fund's strategy involves distributing income that might otherwise have been reinvested. Now, that's not a bad thing, it's just how they're designed. If your goal is weekly cash flow, then NAV erosion might not bother you much. You're collecting those dividends regularly, and that's the main goal. But if your goal is to grow your capital long-term, then these might not be your core holdings. Instead, many investors use them as income boosters, pairing them with funds like VOO or SCHD for balance. That's a smart way to do it. Let one part of your portfolio handle growth, and let another part, like ULTY or WPAY, handle income. Now here's an interesting part. WPAY is still new. It's gaining attention fast, especially because Roundhill has been building a full lineup of weekly pay ETF. Each one targets a different company or sector, and together they're becoming a kind of income ecosystem. WPAY sits at the center of that, bringing them all together. But new doesn't always mean better. Since ULTY has been around longer, investors can actually look at its performance history, how consistent its payouts are, and how it behaves in different market conditions. That track record gives it a sense of stability that WPAY doesn't have yet. So WPAY may be exciting, but ULTY still feels more tested. Now let's think about investor mindset. If you're someone who wants simplicity and automation, WPAY might feel like the right fit. You don't have to choose between multiple funds. Just hold WPAY and get instant diversification with weekly payouts. But if you prefer control and transparency, ULTY might make more sense. You can see exactly what it holds. Big, familiar names across sectors, and you know that its focus is directly on generating income through its own covered call strategy. At the end of the day, it's not about which one is better. It's about which one fits your goals. If you want income simplicity, go with WPAY. If you want a balanced, proven income play, ULTY might be your pick. It's basically passive income made simpler. All you have to do is hold the ETF. That's why these funds are exploding in popularity. People like getting cash flow every week. It feels consistent, predictable, and rewarding, especially for those who use it to reinvest or supplement their income. Now, before wrapping up, it's important to say this. These ETF are not risk-free. They depend on market volatility, option premiums, and manager strategy. Their dividends can fluctuate and their share prices can decline. So they're great tools, but only if you understand what you're investing in. As with anything, high yield usually means higher risk, so always look at them as part of a bigger plan, not the entire plan. So is WPAY better than ULTY? Well, it depends. WPAY offers convenience, diversification, and simplicity. ULTY offers a proven, balanced structure with a clear strategy. Both have their strengths. Both pay weekly. Both are built for income investors. So really the better question might be, which one fits you better? If you prefer hands-off income, WPAY could be the one. If you want a little more control and a tested approach, ULTY might be your match. That's it for this video. If you found it helpful, make sure to like, subscribe, and turn on notifications, because I've got more weekly ETF breakdowns coming your way right here on Money Stick Unfiltered. And let me know in the comments, are you team ULTY or team WPAY? Thanks for watching, and I'll see you in the next one.